Donald Trump's decision to delay severe tariffs on US trading partners while sharply increasing duties on China has intensified trade war tensions but fueled a wave of market optimism. In Asia, the stock exchange of Thailand is opening strong and continuing to climb as investors welcome the tariff suspension. The Hang Seng Index in Hong Kong is surging at the open and maintaining upward momentum throughout the session. Despite the sharp tariff hike on Chinese goods, Shanghai markets are opening higher and showing resilience. Taiwan's stock market skyrockets at the open, tracking the broader global upswing. Meanwhile, Tokyo's Nikkei is surging more than 8%, while Seoul and Singapore are each piling on more than 5%, and Sydney and Jakarta are gaining more than 4%. Tech firms are the standout performers, with Sony, Sharp, Panasonic and SoftBank chalking up double-digit gains, while airlines, car makers and casinos are also enjoying strong buying. Yesterday on Wall Street, the Nasdaq saw a dramatic surge while the S&P 500 rebounded sharply, marking one of its strongest performances in years. Tech stocks led the rally, pushing all sectors higher and driving widespread market optimism. Well, joining us to discuss the markets further is Rema Hans, our associate producer at NewsX World. Rema, thank you for joining us. What can you tell us about the global market reaction to Trump's shock U-turn?
Right, thank you so much, Josh. So, first of all, I would like to take you through Nikkei. We are looking at Tokyo right here. So, of course, after the bloodbath that we have seen in the past couple of days after Trump's tariffs, Nikkei has gone up significantly, which is about 8.23%, which is about 2,609.15 pointers. The session is right now at 34,323.48, which is a significant increase as we have seen in the past couple of days. Moving on to Hang Seng, which is Hong Kong, it's gone up by 1.80%. There is some amount of recovery that we are seeing right here, and the session is at 20,628.86 as we speak, which is about 364.37, by which it's gone up. Moving on to Shanghai, despite the heavy tariffs on China, it's gone up by 0.93% and 3,200 and the session is right now at 3,216.41, which is about 29.60 points upwards. As of course, China's the US tariffs on China, which is right now at 125%. Despite that, there's some amount of stability that we are seeing. However, we will not be able to. We can't foresee whether it's going to go further or downwards. Now, moving on to Taiwan, it's at 19,011.56 the session, and as we are speaking, of course, it's constantly going up. The session is going up by 9.35%, and by 1,626 points. Moving on to the United States, of course, there has also been some amount of recovery that we are seeing here in Dow Jones. The session is right now at 40,608.45, which is about 7.87%, by which it's gone up 2,962.86, which is of course some amount of recovery that we are seeing, and it's likely to go up further as the markets open. S&P 500, right now the session is at 5,456.90. The markets, the stocks have gone up by 9.52%, which is about 474.13. Lastly, I would like you to take you through a NASDAQ, which is mostly your tech giants, and there you can see a significant increase, which is about 12.16% overnight, and the session is right now at 17,124.97, which is about 1,857 points upwards. Of course, in the following days after Trump's tariffs, heavy tariffs on which has of course sent tremors globally, we have seen that the markets have struggled constantly. However, after the announcement of the pause of over 90 days, the markets, you can see that they are slowly, however, recovering. And of course, China, despite having 125% of tariffs, there's some amount of relief for the markets there. Back to you in the studio, Joshua.
Yes, thank you, Rema. A clear image coming from the stock markets, and that rebound has been seen globally. Well, joining us to discuss the rebound and also the decisions made by Donald Trump and his administration is Scott Faulkner, head of the Eagle Enterprises, a security firm based in Washington. He also joining us from Washington. Scott, before we look at these markets, let's look at this decision by Donald Trump. His aides have said this was the plan all along. Is that something you believe in?
Yes, I think that Trump has, if you read his book, The Art of the Deal, you're using carrots and sticks. And so if you look at his first term, there's a number of times where he would come forth with a very, let's say, brutal or pointed position and then back off of it because he was able to get what he wanted in the first place. And I think that's what we're seeing again, is that he wanted to shock the system, which he did. And 70 countries are now in negotiations with the United States to come up with a fairer trade arrangement. And that is exactly where he wanted to be. The stock market is always going to be reacting to things, but what Trump is really trying to do is reorient America's foreign policy, America's tariff policy, America's economic policy, and then also created America-centric world trade policies that literally have not changed since the 1980s. So this is going to take some time, and day-to-day fluctuations are something that Trump's willing to weather.
Yes, absolutely, Scott. The markets, of course, have bounced back, but there still will be an impact on Trump's actions. Do you think that the risk he's taken is worth it, given the fact that people have come to the negotiating table? And looking at the other side and the countries that are now looking at negotiating with Trump, do you think that there might be some feelings there of discontent, given that this may just have been a play from his book?
Well, I think that, since we're looking at a historic shift that goes back decades and is going to probably take years, if not decades, to realign, it had to require a shock to get everyone's attention and to basically lubricate the gears of negotiation. And Trump is very good at that. He's done that in foreign policy as well as economic policy over the years. And so in his second term, he's deciding to use his first 100 days in this way.
Yeah, that's absolutely, Scott. And I want to finally look, before we move on, at China. We know Trump has stepped up tariffs on China, now at 125%. How do you think that this ongoing trade dispute with China and the United States is going to play out?
Well, again, America, and I think this is where we get at least some bipartisanship in our country, that everyone views China as our threat, whether it is economic threat, whether it is health threat, as we did with the Wuhan COVID pandemic, as we look at a geopolitical threat with Taiwan, the South China Sea, that China needs to be reined in. And so what part of that is going to be non-military, and economics is clearly the way to go. America is really, even during the Biden years, I think, nervous that 80% of our pharmaceuticals, or at least the underlying ingredients for pharmaceuticals, come from China. And so we have some strategic and national security and even public health concerns of our dependence on China. And Trump is going to start with these opening salvos, so to speak, to try to wrench America away from its dependency on China.
Scott Faulkner, thank you for your insight on that. You will be, of course, staying with us, but the situation with Trump's tariffs continues to impact everyone across the world, whether that's China, Europe or beyond, and we will be across all of those developments as we get them. Moving to Latin America, and leaders on Wednesday have urged the